Do you ever just, open your news feed or look at the markets and feel totally buried? There's just this mountain of
Yeah.
information. Market numbers doing one thing, energy reports saying something else, global policy news breaking, company announcements. It's a lot. How do you even start to make sense of it all?
Oh, absolutely. It's a huge challenge. Every headline seems important, right?
Yeah.
But figuring out how they connect, what's really driving things, the so what,
Yeah.
that's where the real value is.
Exactly. And that's pretty much what we're trying to do here in this deep dive. We've taken the stack of sources you've given us,
Hmm.
articles, market reports, research, company updates, all sorts of things. And our mission really is to pull out the most important bits, the surprising facts, and kind of connect the dots across stuff that might look totally separate at first glance.
Yeah, think of it as a shortcut.
Right. A shortcut to getting properly informed on this fascinating mix of global energy and market stories.
And it's quite a collection we've looked at today. We've got market analysis, covering the ASX, U.S. natural gas futures, and then specific reports on companies, industries like lined valves, and some really significant articles on the big energy shifts and policy fights happening in China, India, Argentina, South Africa. Quite the range.
Yeah, the common threads seem to be energy and markets, right?
Hmm.
And how they're constantly reacting to policy, tech, global shifts.
Definitely. Our goal is just to guide you through it, point out what really jumps out from the material.
Okay, so what's the plan? Where are we going with this?
Well, we thought we'd start with a quick look at some immediate market stuff, forecasts, and recent moves. Then zoom out a bit to these bigger shifts in major economies and energy sectors, stuff driven by policy and what's happening on the ground. And finally, we'll kind of drill down into one specific industrial market, lined valves, just to see how these big picture forces ripple through.
Sounds good. Ready when you are?
Okay, let's jump in.
All right, starting with the markets. ASX first. The forecast for Friday, May 30th. Looking like a slight dip.
Yeah, based on the SPI futures, the expectation is for the ASX 200 to fall, maybe 22 points or so, about a quarter of a percent.
Which is interesting because Wall Street was actually up the day before.
Right. Suggests maybe some local factors or regional stuff influencing things.
Okay, and commodities. Heard there was some movement there.
Oh, yeah. Oil took a bit of a tumble. WTI was down, 1.4%, settled just under $61 a barrel. Brent crude fell, too, about 1.1% to around $64.
And one of the sources linked that dropped pretty directly to news about U.S. trade tariffs.
That's right. An analysis suggested that news about President Trump's tariffs being reinstated after an appeal that put pressure on energy shares. Specifically mentioned Santos and Karoon on the ASX feeling the heat.
So a trade policy development immediately hitting energy stocks.
Yeah.
Classic ripple effect.
Exactly. But interestingly, gold did the opposite.
Ah, okay. Went up.
Yep. Gold futures rose 0.6%, climbed over $3,314 an ounce.
And the thinking there, according to the sources, was safe haven demand.
Precisely. The same tariff uncertainty that hit oil apparently sent some investors looking for safety in gold, which, the analysis noted, could be good news for ASX gold stocks like Evolution Mining and Northern Star.
Yeah, makes sense. Trade worries often push people towards gold.
It just shows how sensitive markets are, to policy noise, global tensions.
That's the thing. Okay, let's pivot a bit. U.S. natural gas. The sources describe that market as choppy.
Yeah, choppy is a good word. Prices have been seesawing quite a bit. The reports we saw had June futures up slightly, around 3.346 cents, and July futures at 3.746 cents. This was as of May 27th.
So what's behind that choppiness? Is it one main thing or?
It's more like a mix of factors, kind of pulling in different directions. You had a big drop in demand across the lower 48 states over the holiday weekend, but then it recovered. And we've also had a run of really large storage injection.
Right, I saw that mentioned. The latest one was pretty big.
It's huge, 101 BCF billion cubic feet for the week ending May 23rd. And that was the fifth week in a row with an injection over 100 BCF. The report said that big build really pushed futures lower on Thursday the 29th. So yeah, strong storage is definitely weighing on prices.
Okay, so plenty of gas going into storage, less worry about supply down the line. What else is in the mix?
Well, on the supply side, things are a bit tighter. Average output in May dipped slightly because of maintenance. Work on pipelines like Kinder Morgan's Permian Highway was mentioned. And also, less gas is being used by LNG export plants right now, again because of maintenance at several facilities.
Which ones?
Let's see, Cameron, Cheniere's Corpus Christi, and Sabine Pass, and there were some brief reductions at Freeport LNG, too.
Okay, so maybe some supply tightness and lower LNG demand pushing back against the storage builds a little.
A little, yeah. But then you have weather, which is always the wild card, right?
True. What's the forecast saying?
Forecasts are pointing to mostly warmer than normal weather through about June 11th, and the longer-term outlook suggests a hot summer.
Which usually means more demand for power plants running AC.
Exactly, so that potential for higher demand gives some underlying support. But the analyst sentiment in the sources, pretty skeptical about prices going up much and staying there without some kind of external shock.
So the expectation is more bumpiness.
Yeah, kind of choppy, run lower, seems to be the view. Unless something big changes the supply-demand picture, it's just a complex market reacting to lots of different signals at once.
It really sounds like it. Okay, let's loop back to those trade tariffs for a second, because it sounds like even that story isn't totally straightforward. One source linked the reinstated tariffs to the oil drop and gold rise.
Yes, but then other sources added more complexity. They talked about the broader U.S.-China trade tensions, naturally, but they also reported that some of Trump's tariffs were actually being blocked by a trade court.
Ah, okay. So conflicting reports, almost, depending on where you look.
Pretty much. Some saying tariffs are back on and affecting markets, others pointing to legal hurdles. So we're just reporting neutrally what the different sources said. It really highlights the uncertainty, how unpredictable this policy area can be and how markets react even to confusing signals.
Right, and beyond just trade policy, the broader U.S. fiscal situation was mentioned as another source of market uncertainty.
Yeah, there were mentions of turmoil in the bond market. Yields on 20-year bonds reportedly surged past 5.1%. Plus, there was that recent Moody's downgrade of U.S. debt from AAA down to AA1.
Okay. And there was something about a specific bill, nicknamed the One Big Beautiful Bill in one source.
That's the one. The reports noted that even though it got House approval, some early analysis suggests it could significantly increase the federal deficit.
How much?
The projection mentioned was about $3.8 trillion between 2026 and 2034. Now, regardless of the politics around the bill itself, the point the sources made was that this projected debt increase just adds to that general backdrop of market uncertainty.
Got it. Okay, shifting gears away from the U.S., there was a very specific policy fight highlighted in South Africa about fuel levies.
Yes, opposition building against planned increases that were set for June 4th. The argument from the opposition, specifically the EFF party, is that these increases are basically a tax. And they're pointing to an old court ruling about VAT increases, saying these fuel levies need support from the National Assembly. They can't just be imposed.
So it's not just political pushback, it's a legal challenge to the process itself.
Exactly. The sources described it as potentially leading to a standoff, maybe even court action. And this whole fight over the levy could make fuel prices worse for drivers there, which is kind of ironic because the sources also mentioned some positive signs otherwise, like lower oil prices and a stronger rand.
And there's a key date coming up.
Yeah, the Standing Committee on Finance meeting on June 4th. That's when this issue is expected to really come to a head.
Okay. From fuel costs to nuclear power. Another policy shift mentioned was President Trump's executive orders focusing on nuclear.
Right. These orders apparently aim to streamline the Nuclear Regulatory Commission, try and speed up deployment of new reactors, and there are also initiatives mentioned to boost U.S. uranium mining and enrichment.
And the interesting part here was the immediate market reaction the sources reported.
Oh yeah, absolutely. Very direct impact. The reports highlighted significant gains in uranium stocks right after this news. They gave specific examples. Cameco up over 10%, Denison Mines over 13%, Uranium Energy surged 25%, and even the Sprott Uranium Miners ETF jumped over 12%.
Wow. So a clear signal of policy driving a specific sector.
Definitely. Shows how targeted policy can quickly move markets and maybe signal a renewed focus on nuclear in the U.S. energy picture.
Okay, so we've covered some market snapshots, policy impacts. Let's look at these bigger regional energy shifts now, starting with China. Really significant news there.
Yeah, this was quite something. For the first time, China's overall greenhouse gas emissions reportedly dropped. Sources indicated a fall of about 1% over the past year.
And the really striking part, maybe the surprising part, is that this happened even while their energy use and economy were still growing.
Right. That decoupling is the key thing here. It's a major milestone, as the analysis pointed out. And it seems to be mostly down to China's absolutely massive build-out of clean energy wind, solar, nuclear. They're adding it so fast, it's actually outpacing the growth in their electricity demand.
Which means they're using less coal and gas for electricity generation.
Exactly. That's led to a drop in fossil fuel power production.
So China's now kind of joining that group of countries decoupling emissions from growth. and ahead of their own target to peak emissions before 2030.
Yeah, it's significant. And you have to remember, China is also the world's biggest maker and exporter of clean energy tech, which affects global costs too.
But the reports did add some caveats, right? It's a small drop so far.
It is. And it could reverse if the economy grows even faster without tougher policies. Plus, there's the issue of other greenhouse gases like HFC 23 that's a really potent industrial byproduct. China's committed to curbing it, but it needs ongoing effort.
And the sources also threw in a potential counterpoint related to U.S. policy.
Yeah, they noted that if U.S. policy actively boosts fossil fuels or rolls back GHG rules, that could potentially offset some of this global progress, including China's gains. It just paints that complex picture of different forces at play globally.
Okay. From China's clean energy surge, let's pivot to India. Big economic growth story there.
Definitely. IMF projecting strong growth, around 6.5%. And the reports highlighted India attracting a lot of foreign investment, companies shifting manufacturing from China, big names mentioned like Apple, Boeing, Samsung, Nokia.
Okay, so let's unpack that. The real insight here from the sources isn't just the manufacturing shift, it's the energy side of that story.
Precisely. That kind of rapid economic growth needs a ton of reliable energy, especially baseload power for industry, infrastructure, transport. So the reports project this growth is going to really spike demand for traditional fuels, oil, and natural gas, even while they're also adding renewables.
How much of a spike are we talking?
One source projected India becoming the single largest source of global oil demand growth by the end of this decade.
Wow, the single largest globally. That's huge. And they're getting ready for it, building infrastructure.
They are making major investments in LNG import terminals, apparently boosting capacity by 85% with new ones coming online. And there's this growing energy relationship with the U.S. too. The U.S. is already India's second biggest LNG supplier, and Indian companies are investing in U.S. supply projects.
So it's a really interesting contrast with China, isn't it? China decoupling emissions with clean energy, while India's boom means this massive surge in demand for traditional energy alongside their renewable push.
Exactly. The sources called it the early innings of a generational shift in global energy demand. It really underlines how different countries are on very different energy transition paths based on their own economic needs and energy security concerns.
And speaking of countries leveraging their energy resources, Argentina, making a push to export LNG.
That's the plan. Driven by more domestic gas production, especially from Vaca Muerta, that's their big shale gas play. Market experts cited in the sources see potential, though Asian markets are tough competition. Maybe Europe, Latin America for spot sales.
But there are hurdles to overcome first.
Oh yeah. The main things are keeping their upstream gas cost competitive and, critically, getting the financing for the infrastructure. To be a serious, reliable exporter beyond just neighbors, they need permanent liquefaction plants, pipelines to the coast. That's big money.
But they are taking concrete steps.
Seems so. A consortium called Southern Energy reportedly made a final investment decision on a floating LNG export project. 2 vessels aiming for 6 million tons per year total capacity, with the first startup planned for 2027. So it's a tangible move.
And there might be a domestic benefit too.
Potentially, yes. The idea is that producing more gas for export could also let Argentina use more of that gas domestically, replacing oil that's currently used for generating electricity. So maybe better energy security and lower costs at home too.
Okay, fascinating. We've gone from global markets and big policy moves down to these huge regional energy stories. Now, let's zoom right in on that specific industrial market mentioned in the sources, lined valves. How does this connect?
Well, it's a great example of how these macro trends, these big shifts we've been talking about, actually filter down and create demand for specific, maybe less obvious industrial components.
Okay, and the market itself looks pretty healthy.
It does. The overview showed it was around $3.26 billion in 2024, expected to hit $3.43 billion this year, 2025, and projected to reach nearly $4.2 billion by 2029.
What kind of growth rate is that?
That implies a CGR, compound annual growth rate, of over 5% for the next few years. Solid growth.
So why are these valves growing? What's driving it, and how does it link back to energy?
Right. Line valves are basically essential for handling corrosive or abrasive stuff safely in industrial processes. And the drivers listed for their growth, they connect directly back to a lot of what we've discussed. Chemical industry, petrochemicals, pharma, water treatment, but very importantly, the oil and gas sector.
Okay. So all that activity in oil and gas we just talked about, India's demand, Argentina's production push, even China still importing lots of crude that directly drives demand for these valves.
Exactly. The sources really emphasize how vital they are in oil and gas for reliable flow control, safety, especially dealing with corrosion. So more exploration, production, refining, driven by those global energy needs means more demand for lined valves. It's a direct link.
Makes sense. And are there specific trends within the line valve market itself?
Yes, a few key things were highlighted. One is the move towards smarter valve technologies. An example given was Emerson's smart valve positioner system using sensors and algorithms for really precise control. There's also a focus on eco-friendly solutions, more IoT integration for remote monitoring, predictive maintenance, better sealing tech for reliability, and just generally more automation and flow control.
So even these fundamental components are getting smarter, more connected.
Absolutely. It's all about improving efficiency, reducing downtime that's critical everywhere, especially in oil and gas. Oh, and geographically, Asia Pacific was the biggest market region in 2023, but North America is expected to see the fastest growth going forward.
It really is fascinating how you can trace a line from, say, a policy debate about tariffs or a national energy strategy in India, all the way down to the market size and tech trends for something like a specific industrial valve.
It really shows you how interconnected everything is in the global energy economy. It's like this intricate web.
So let's try and pull it all together then. Quick synthesis. We started with those immediate market signals, the ASX looking slightly down, how tariff news hit oil but boosted gold, and that really complex picture in U.S. natural gas with storage bills, maintenance, weather forecasts, all creating that choppy price action.
Right. Then we move to policy actively shaping things. The confusion around the U.S. tariffs, the concerns raised in reports about the U.S. fiscal outlook, that specific political and legal fight over fuel levies in South Africa, and then the U.S. push for nuclear power and uranium, and how that immediately lifted related stocks.
And then the big regional stories. China hitting that emissions milestone, actually dropping emissions while growing, thanks to that huge clean energy push.
A really key development.
Contracted with India's boom, which is creating massive demand for traditional energy, positioning it as a huge future driver of global oil demand, and Argentina's ambition to become an LNG exporter, taking concrete steps with that floating LNG project.
And finally, we saw how all those large-scale trends create demand right down at the component level, like for line valves, crucial for industries like oil and gas, and how even there, technology like smart systems and IoT is driving change.
So by really digging into these different sources you provided, hopefully you, the listener, have gained a much richer, more connected view than just skimming headlines. You see how these pieces fit together.
That interconnected view, that's really the key takeaway, I think. Helps navigate all the noise.
Definitely. And maybe one final thought to leave you with. We've seen these really contrasting national energy paths playing out. China's aggressive clean energy build bending the emissions curve, India's rapid growth driving huge traditional energy demand alongside renewables, South Africa grappling with fuel cost policy challenges. What do these very different national approaches, each driven by unique economic pressures, politics, resources, what does it all mean for that bigger picture, that unified global effort to transition energy systems and tackle climate goals in the years ahead?
That's the big question, isn't it? How do all these different paths converge or maybe diverge? Something to keep watching.
Indeed. Plenty to think about there.